Abizer Diwanji, partner and national leader at financial services EY, is now joining us. Abizer, what do you make of this entire news flow around the ADAG group?
No, well, the entire news flow. I mean, let's just talk about the fact about the pledged shares. I think, in a way, every promoter group has been caught into this mess. We had Z earlier in a similar situation. And what really happens is that when there is panic selling out there in the market from the holders of these pledged shares, the equity value erodes quite significantly. However, and hence it's a great idea for the banks to exercise restraint on the back of a promised restructuring. So that's fundamentally is never a problem. I think the problem in the market sometimes seems to be the fact that there have been deadlines of 30th September being set. For any normal transaction to happen at a market value, if you have deadlines, then they tend to extend towards those deadlines, and suddenly the values drop towards the end of that deadline. So in a way, it's good that people are not taking panic decisions, because that will never help any creditor realize value. But at the same time, publishing every detail on every deadline will only defer the matter, and the eventuality may still happen. So it's best that these things are curtailed, but implemented in a more judicial and sometimes not so transparent manner.
Right, but what do you make of the entire pledge issue? Most of the promoters that are having any issue as far as their debt at promoter level is concerned are facing this issue. Do you think this will continue?
Of course, because yes, it will. Because to some extent, do not forget the fact that we tried every measure to make sure that we kept our companies current, and in the process, we pledged our equities, we pledged our assets, effectively got into a debt trap by borrowing more to pay interest, and in the bargain leveraged ourselves further. So that has happened in almost every company. However, a lot of companies sustain the market capitalizations because the underlying businesses were good. Unfortunately, the market capitalizations in a market like ours sometimes tend to crash when a lot of equity is put into the market at one time. The good news there, of course, is the fact that there are underlying businesses which are valued well by the market. The bad news is that in situations like this, especially on pledge issues, the market suddenly gets so hollow that any shares pledged out by a pledger, put out by a pledger to sell, effectively nosedives into a cheap bargain for somebody who then ends up buying it. So all in all, yes, we've leveraged at promoter levels to put into operating companies at equity, which never was equity at some point in time. So that's the collateral damage that we are in. But we are where we are, it is a widespread problem. Yes.
Right. You could also just say that, this had become a very famous product, and companies, were just leveraging on companies that were giving pledge shares were just giving on the brand name of the company. And the day you have like a 20, 30%, 40% fall, they really have nowhere to run. So that's also a big issue.
Well, yes, it is. It is and it is not. So let me also tell you this, that, when so look at the Kingfisher brand at some stage. We did that, right? So we do, in optimistic times, we tend to actually value the intangibles much higher. But the good part is that most people have taken margin safeties also. So as far as the bank's exposures are concerned, sometimes they've done it at 50% value of the shares, etc. But then the values nosedive so badly that effectively you are able to take a little bit of a hit and sell at a loss. But that apart, selling at a loss is still not that big an issue because there were margins available. The bigger problem is that the enterprise gets killed, because the equity value, which actually sustains a lot of the operation of that company, suddenly nosedives significantly. And that has collateral damage on the actual operations of the business, which is even scary.
Right, Abizer. So, it's liquidity which creates the problem, and sometimes it's the fall that creates the liquidity issue, which is what Abizer was pointing out to. Thanks so much for giving us your perspective.